The Reserve Bank of India's Monetary Policy Committee, commonly known as MPC, voted unanimously to maintain rates at current levels in their latest October meeting. Currently, the policy repo rate is 6.5%. Furthermore, the MPC voted 5 to 1 to maintain its focus on withdrawal accommodation. As expected, this happened. While inflation dropped from 7.44% in July to 6.83% in August, it remains well above the upper threshold of the central bank's inflation targeting system. According to the governor, the domestic economy and external accounts are eminently manageable. Nonetheless, his policy was very cautious. As a result of the volatility of the global financial market and the aggressive monetary tightening by other central banks across the world, the central bank appears concerned about these risks. Additionally, inflation remains at a risk of rising in view of the high global energy prices and the volatility of financial markets. Monetary policy must be prepared to act in a timely and appropriate manner. There is a great deal of uncertainty regarding inflation's trajectory due to food prices. In July, food inflation reached 11.51%, and in August, the rate fell to 9.94%, and it is expected to soften further as vegetable prices correct going forward. But the outlook remains uncertain. In addition to low rainfall, dwindling reservoir levels, and lower area under sowing for pulses this season, El Nino is a factor which had its say as well. There is a possibility that other food items will be affected by price pressure as a result. Cereals, pulses, and spices exhibited higher inflation in August along with vegetables. In contrast, core inflation has fallen by 140 basis points from its peak in January to 4.9% during July-August, excluding volatile food and fuel components. When food inflation remains elevated for a long time, it can affect household inflationary expectations. RBI has kept its inflation forecast unchanged at 5.4% for the full year, despite the sharp rise in headline inflation in the second quarter. Its second quarter forecast has been raised, but its third quarter forecast has fallen steeper. According to the World Bank, India's inflation for the full year is now forecasted to be around 5.9% versus 5.2% previously. There is only a marginal difference between the revised forecast and the upper threshold of the central bank's inflation targeting framework. In view of the RBI's forecast for inflation in 2024 of 5.2% and the growth forecast for this year of 6.5%, which indicates a strong economic climate, a longer pause on rates is more likely. MPC members have so far opted to ignore these surges in food prices, and they did it rightly so. It must, however, consider domestic as well as global risks to the growth and inflation trajectory. The goal of maintaining price stability should guide the actions of the central bank going forward. Hope the information is useful to you all. Thank you very much for your patient hearing.